Hi, this is Chris McKaylee, and on today's podcast video, we're discussing some key rules in drafting California tax legislation, which sometimes can be tricky in this state. The drafting of bills that would add, amend, or repeal sections of the California Revenue and Taxation Code require special attention to a number of provisions. Whether they're technical or mechanical or substantive in nature, drafting tax bills can often be tricky. One of the main issues to determine is whether a bill is a tax levy. This is important because tax levies take effect immediately upon the governor's signature and being chaptered by the Secretary of State. Of course, a tax levy can still have a delayed operative date for its provisions. The rule for determining whether a bill is designated by Legislative Council as a tax levy is: what's the principal purpose of the bill? If the principal purpose is to change the base rate or burden of a tax, then it will be designated as a tax levy. Again, the Office of Legislative Counsel makes this determination. On the other hand, if the bill contains multiple tax law changes, the bill may or may not be deemed a tax levy, depending on what is the principal purpose. In general, a bill that increases taxes or decreases taxes, or a bill that creates or changes a tax expenditure program, like a credit, deduction, exclusion, exemption, these are all deemed tax levies by the Office of Legislative Counsel. However, keep in mind, a tax levy is not limited to just tax increases. Another important point is that a retroactive tax law change, which is allowed with certain special purpose language, cannot be a tax levy, so it will not take effect immediately. Even though a tax levy bill can take effect immediately, it can also have a delayed operative date, as I mentioned earlier. An example of such a provision is contained in the following statement. This act provides for a tax levy within the meaning of Article 4 of the California Constitution and shall go into immediate effect. However, the provisions of this act shall become operative on the first day of the first calendar quarter, commencing more than 90 days after the effective date of this act. For property tax law changes, a bill has to specify to which lien date or dates the bill applies to. This date begins every January 1, so you might see language that says, the amendments made by this act, adding this subdivision, shall apply with respect to lien dates occurring on or after January 1, 2005. A second main issue is whether the bill must comply with Revenue and Taxation Code Section 41. This section of the Rev and Tax Code, or the CRTC, requires any bill that proposes to authorize a new tax expenditure program under the personal income tax law or the corporation tax law, or an exemption from the sales and use tax law, must contain three specific items: goals and objectives, detailed performance indicators, and data collection requirements. So a bill that creates a new credit, exemption, deduction, exclusion in the income, franchise, or sales and use tax areas have to include those three provisions. And the Legislative Council's digest will contain language such as, existing law requires any bill creating a new or expanding an existing tax deduction to contain, among other things, specific goals, purposes, and objectives the tax credit will achieve, detailed performance indicators, and data collection requirements. A third main issue in drafting tax bills is that the tax bill must comply with certain drafting principles. So here are some things to keep in mind. The relating clause in the title is always the same, relating to taxation. The tax levy designation, if deemed to be, is always set forth at the end of the title. To take effect immediately, tax levy. In addition, the Legislative Council digest always concludes with the following statement: this bill would take effect immediately as a tax levy. Plus, there's also a plus section at the end of the bill that contains the following statement: this act provides for a tax levy within the meaning of Article 4 of the California Constitution and shall go into immediate effect. For sales and use tax bills, the existing law section of the Legislative Council's digest often begins with the same or similar paragraph. In addition, these types of bills will usually contain a disclaimer that no reimbursement will be provided to local agencies by the state. As a result, the Legislative Council's digest usually contains language such as the following. The existing law requires the state to reimburse counties and cities for revenue losses caused by the enactment of sales and use tax exemptions. This bill would provide that, notwithstanding Section 2230 of the Revenue and Taxation Code, no appropriation is made, and the state shall not reimburse any local agencies for sales and use tax revenues lost by them pursuant to this bill. For personal income tax bills, the existing law section of the Legislative Council's digest often begins with the same paragraph as well, such as the personal income tax law imposes a tax on individual taxpayers measured by the taxpayer's taxable income for the taxable year, but excludes certain items of income from the computation of tax. By the way, a tax bill can contain a named act as well as findings and declarations by the legislature. So recently there was a measure that was in Section 1 said, this act shall be known and may be cited as protecting our restaurants tax credit. Again, you could have in Section 1 or Section 2 of the bill, one or more legislative findings and declarations. When the tax bill contains language proposing to conform or not to conform to federal tax law, the specific Internal Revenue Code provision is cited, along with whether it applies or does not apply, or any other changes that are being made to the federal tax law for purposes of the state tax law provision that conforms to it. In addition, for federal tax law conformity bills, the Legislative Council's digest will usually contain language along the following. The personal income tax law in modified conformity with federal law generally disallows passive activity loss and passive activity credits for any taxable year in computing taxable income. Finally, for bills affecting the personal income tax law and the corporation tax law, the same language is replicated in both areas of those laws. In other words, the same code section language in the PIT law is found in the corporation tax law and vice versa. This is to ensure that taxpayers, regardless of how they are legally formed, have the same legal provisions applicable to them.